Hi there, traders. This is Brad Gilbert with FX Market Insight for the 29th of October. Now, just to kick the Monday trading off in Asia, okay, it's a pretty quiet start. There's been no sort of dramatic moves in the currencies, which is always good. Generally means there's not some crazy event that has impacted the dollar, US dollar, or the other pairs. Now, I just want to leave the charts here pretty much sort of untouched from Friday. You can see the calamity here. Now, there's a fair bit of geopolitical stuff going on. But check out the Aussie breakdown through 70.40, pops back up to 71 cents. Okay, so you get a fair amount of US dollar weakness, and that's apparent across the board. Now, that was put down to sort of general weakness in US equities. US advanced GDP numbers were quite strong. So, but in the detail, they were sort of talking about some PCE inflation numbers, a part of that GDP number, which did miss the mark. So, anyway, the global equity market and the raft of US sort of geopolitical issues they're involved in was the main reason or reasoning that I've seen put down to the fall in the US dollar and the US dollar index. So euro back up to 114.20. I'm still looking to sell euro. I don't think that picture hasn't changed at all. And funnily enough, like Brexit, this is what you get. You get the Brexit thing here. The dollar's sort of falling against a raft of everything except for sterling. Sterling's on its own path. It's all about Brexit. No deal pushes sterling down. A deal pushes it higher, which I would expect something like that this week. Now, dollar CAD bottomed out after the Bank of Canada raised rates, and then you see this massive exodus. It's all over the place and way too hard to sort of call what's going on in Canada at the moment. So the major pairs, like coming into today's trading, if you can't see it, right, this is a bit of a calamity, as in the technicals are all bashed up. Now, traders will be waiting and watching to see how this shapes up and gains momentum from Friday. But at the moment, the major pairs at the moment are not really tradable in my eyes. Let's just have a look at the US dollar index. To me, this is still on its path. Okay, let me just make that a bit thicker. It's still going up. We are sort of testing support down here around 96.30 on the dollar index. But to me, it's still pretty much business as usual, despite, the US equity markets once again weak. And that was, foreshadowed any sort of strong numbers. Now, dollar yuan is, it's the big sort of, it's the pest out there at the moment. And the People's Bank of China keep lowering or raising, I should say, the fix for dollar yuan, and that is putting upward pressure. Now, they said they're going to control or protect 7, but that doesn't seem to be the case, and everyone's getting a little bit miffed. What are China playing up to? It looks like they're just sort of moving the currency around and taking their cash out of that as opposed to anything else. But we need to keep an eye on this, and I would be ruling out a 5-cent move straight down if the People's Bank of China want to get aggressive with intervening. So anyway, that's an interesting one to keep following. Right. Now, let me just come over here to the news. Just want to give you a look at the general news and why those major pairs are sort of where they are. It's a bit of I've just been reading through a few things. US dollar topples from 2-month highs. Wall Street worries persist. Now, there's worries about global growth. There's worries, and this is sort of coming through the equity markets, that negative equity markets. There's also, they've put in there as well the whole raft of issues around the US or all the geopolitical issues they're involved in. That's sort of putting like a bit of a negative spin on things. I think if anything as well, coming up to the weekend, I think people were just pretty happy to lock in some cash, especially with Brexit. Brexit continues to sort of bang away. Like dollar CAD hit 6-week lowest stock slide. Okay, well that's, you know what? I mean, the earnings season, October earnings season, right? Still, we're at the last end of it. A few big companies missed the mark, but I don't think that's the main reason why dollar CAD's massively high. I think it's because the market got itself so short after the Bank of Canada meeting last week that they've just been stopped out all the way up. Guarding stability. I mean, this is the biggest joke here. I mean, guarding stability, it's all about manipulation. Now, when you look at the markets, as you do on a Monday like today, you're sort of really trying to focus on where the action is. Now, I showed you the major charts. Not much shape there. When you do look at the dollar index, there's very good shape on it. Okay, so you want to keep a close eye on it. Obviously, if sterling in particular, sterling, if euro in particular moves, it's 58% of the basket. So if a move up in euro pushes the dollar index down and vice versa. So let's just take it that with a grain of salt. But to me, the dollar hasn't really changed the picture. And then you come back into to have a look at the dollar index. The MyFX Trading Hub, just coming down here now. The good thing is we do have the PCE price index numbers themselves coming out. Okay, US numbers first thing on a Monday is a really good thing because it could give the US dollar a bit of direction. We can see it resting on support. So if those numbers are weak, well then we've got a trade where the US dollar should dip down below 96.30. Trading conditions, well, you know what? It's pretty orderly. There's no gapping in the market. There's no sort of massive crazy ranges. But what the main thing is, the direction is coming from geopolitical events, and whether that's equity markets, well, you can sort of say it's a part of that. But it's not easy to sort of pick up when these markets are going to start moving, and that's why the data is very important. So today's PCE price index, keep an eye on that. That's the only thing that I can see worth watching to come out. When you look at those charts, as I was just going back through the major charts here before, to me there's been no change of the picture from Friday. The overall picture, I'm still bearish euro, still bullish dollar at this stage. If it drops a bit further, well then that picture will change. And dollar Swiss is still bullish. The rest of these currency pairs, as you can see by those charts, obviously got Brexit banging away with sterling, Aussie and Kiwi just chopping away, as is dollar yen and dollar CAD. They're pretty hard to call this stage. So to me, no change, no dramatic change there from the overall picture. And the one thing is, if you have a look through, just prepare yourself for the week. Go down through the upcoming events for this week. We've got a huge amount of really chunky stuff to get into. Obviously, the Bank of England meeting will be one of the key events. You've got Aussie CPI figures. Start to see some Chinese manufacturing numbers. Hopefully, these numbers start to show some impact of those tariffs. We get a look at that. US consumer confidence and a whole bag of things. So there's plenty going on. Today, Monday, as I was just going back before there, just showing you the charts, don't necessarily run straight into Monday and start sort of trying to work out what's going on. What you will be doing, like these charts here, these sort of moves are indicative of markets where traders don't really know what's going on. Euro looks pretty uniform. I'm still looking to get short on a rally or maybe even on a bit more weakness. Whereas sterling, it's almost worth a soft bet or a soft trade, I should say. Just looking for a stop entry. So if there is some news about a deal being done, it's going to rally 200 points. We might be able to get into that. So that's potentially one of those left field orders we just put in. Dollar CAD, to me, it's hawkish central bank, which means it should be lower. We've got oil, which is sort of back at $67. It's all over the place. Equity markets being the main culprit there as well. And that's pretty much it, guys. So have a look at your charts. If you're looking for a bit more clarity on your direction, always go back to the daily charts. You can generally see a bit more here about what's going through the market. And that's, at the moment, as I said, there's been no major change. The one thing is, if the dollar starts to break lower a bit further, we're starting to almost get that breakdown here in dollar yen. I would think if the equity markets keep blowing up, another day of big negative equities in the US, we'll see dollar yen lower as that safe haven play comes into play. All right, the rest of them pretty much, Aussie and Kiwi, they're losing momentum, but they still drifting lower. Euro to me has broken down here. That's where I'm sort of bearish euro, and sterling, well, it's broken down, but Brexit, too hard to call. All right, guys, that's it for me. Have a good trade day. Have a good week. I'll see you in the trade zone. We'll catch you tomorrow. Cheerio.